Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Michael Pugh, the president and CEO of Carver Federal Savings Bank. This was a fun conversation for me. We dove into some of the alternative data and ways that this bank is looking at underwriting loans, small business loans, as well as consumer loans. Carter is actually both an MDI, a minority depository institution, and a CDFI, a community development financial institution. So we really dove into kinds of programs they're doing to invest in the communities that they serve in kind of New York down to DC area, so along the East Coast. Really enjoyed this. I think the question of how do we better serve communities, how do we better support the small businesses in those communities, and what are some of the programs or approaches or data we can look at to be better able to serve those communities, those businesses, was really interesting. I enjoyed this conversation with Michael. I'm sure you will as well. So without further ado, here's my conversation with Michael Pugh. Michael, thanks so much for making the time and joining us on the podcast today. I really appreciate it.
Thanks, Jeff. It's a pleasure to be joining. Looking forward to this conversation.
Yeah, I think it's going to be a fun one. I've started all of my podcasts recently by asking my guests to give me kind of their personal history, how they wound up here, given that not many of us dreamed sitting around the Christmas tree, I guess what they would now being bankers when we grew up. That wasn't, unless you watched It's a Wonderful Life, maybe it probably wasn't your model for where you're going, but here we are. So I'd love to kind of hear your story of how you wound up here.
Yeah, sure. So I grew up in Detroit, Michigan, and that was many moons ago for me, of course. But during that time, I come from a family of healthcare providers. The conversations around the table for us were often centered on patient care, providing solutions to help with overall health and wellness. And so there was somewhat of a kind of a mental motto really focused on being in a field professionally that would allow me to have healthcare or wellness, I should say, as a critical part of what I was going to be doing. So when I initially kind of started looking for jobs while self-funding myself through college, one of the key things I did was I worked in geriatrics physical therapy as a physical therapist assistant. The grappling realities of what happens in terms of our overall circle of life and patients, was pretty significant and a bit too much for me at 19, 20 years of age. So I kind of quickly realized that maybe healthcare per se wasn't the best field for me, but I wanted to do something that would be a part of overall wellness. And it just so happened that I landed a job as a part-time teller while in college, having the opportunity to see that when conversations about finances happen and solutions are offered, you can help, support the overall wellness of individuals and the look of relief on their face. I knew quickly thereafter that I wanted to be a part of those kinds of conversations, and I felt that would be a way for me to contribute to wellness. 30 years later, here we are today and still focused on solutions for customers.
I love it. My wife is a physician as well, and I think her stories around the table have scared my children away from even contemplating a career in healthcare.
Yeah. Well,
but I love
the people that do it because
absolutely
it's very, very important. So many first responders that played a critical role in our nation's health and recovery. So, hugs to your wife from the Carver family.
We appreciate that, and to your family as well. So let's talk about the nature of those conversations. With your with your family, but now with the clients, the kind of thing that got you here. And one of the phrases you used when we talked earlier was, "How do we get more people?" I think your phrase was "into the fold," like helping more people who have traditionally not been in the credit system or have the best access to credit or traditional financial instruments, bringing them into the fold. So tell me a little bit more about how you think about ways we can bring more of the American public and more of the communities that maybe haven't traditionally been in the fold into the fold of the financial system.
Yeah, I think that we have to look for alternative solutions, not the standard or typical banking solutions that we've historically seen. And I'll offer up a few examples. We know that within our nation, there's a significant number of underbanked and unbanked population. And in such a rich nation, the notion of having individuals that have never had a bank account, or they have a bank account that's significantly underutilized, not seen as their primary way of managing their finances. It's almost hard to believe, but the reality is that that happens to be the case. So we've continued to work on a number of initiatives. One of which that we have at Carver is called Carver Community Cash. It's a program that allows non-customers to actually come in and pay their bills, send and receive money. Many of, especially here in New York, many of the underbanked and unbanked community happens to be first generation Americans here and in New York. And so we're meeting them where they are in their financial journey and helping them by bringing them into the banking space. And what we've seen over time is that there's about a 15% migration of customers that had no bank relationship with us, moving into setting up a traditional bank account and starting to become much more interested and curious about other services that can help them buy their first home and a number of other things. The fundamental thing here is building trust, and that can only be done by ultimately meeting the customer where they are again in their journey. The other thing that we've really focused on is thinking about credit solutions that support small businesses. And so, as an example, we've developed a micro loan fund. And this fund, done with a woman owned fintech company called Happy Mango, it allows us to extrapolate data that is alternative data for customers without relying on the traditional FICO credit scores, if you will. And so we're looking at things like if the small business has paid their rent on time, if they've made their utility payments on time, and we're validating it through some of the data that we're pulling from their bank accounts or other sources. Why is this important, Jeff? Again, when you consider the idea that 40 million Americans or so don't have a traditional credit score that would allow them to get access to capital. If you are an entrepreneur without access to capital, you can't grow and sustain your business. And so, by looking at these alternative sources, we believe that we ultimately can help the individuals get on the credit map and start to build a much brighter financial future.
Well, that's a lot of content there to dig into. I want to dig into each of those two pieces a little bit. One, I'm fascinated in your community cash, that experience in bringing the unbanked into the banking fold. I mean, you mentioned trust was the key thing you needed to learn, but I'd love to understand what you learned from that experience about what has historically prevented people or caused people not to engage. I mean, it is, you said it's kind of unbelievable. And my mind's kind of blown to think about. I mean, I know it's true, but going through the realities of not being banked, having a bank account that I could it's kind of crazy to think about for me living that way. And I'm curious what you see as the drivers, if it's just a lack of trust or other things that cause people to choose to not participate in the banking system, or if there's other barriers to them. And then what it is you felt like was the key thing to earning that trust and getting over the hump where people said, hey, I can not only do this one thing with you, but there's other opportunities to improve my situation. What did you learn from that experience on what was stopping people or the most effective ways to earn and build the trust and bring people into the fold? Because it's an area which, so often we rely on our personal intuition. I have no personal intuition to lead into that consumer population. So I'd love to understand some of what you learned from those programs and what you think is going on there.
Sure. Well, we've done a number of focus groups with the underbanked and unbanked population. And some of the key things that we've learned in conversations is that for many of the individuals within both of the communities that I've just noted, their experience with banking is by way of using check cashers. And so if you
Mm-hmm.
consider first generation Americans that have come from other countries, their banking regulatory system may not be as rigorous as what we've seen here in the US. And so there's a trust issue around safety and soundness if their money is going to be there. There's the issue of having seen, in many cases, check cashing centers being the way that financial services were handled. And then there's an educational component there in terms of helping customers become more aware of the services that can be made available at a bank. That is, having access to banking should be available for every American, every individual within our country. And so if you take those pieces, each of them, and you kind of look at them, you consider in some of the conversations we've had, we've learned from individuals where they've talked about being a kid and remember standing in the check cashing center line. And so it was what their parents did. And so then that became the way that they looked at how financial services should be handled. So now you're introducing a very new concept, right, to them about banking. The safety and soundness component, ensuring that your money is going to be there when you come back and you need it, and the importance of being able to save for your future. And then, again, as you continue to build that trust, finding ways that through education to share information in a way that helps our customers and our community ultimately better understand the choices that they have in order to plan for their financial future.
Interesting. Yeah, it's a fascinating set of backstory and information. I also wanted to dive into this the microloan program and some of your small business. I know you have some other small business lending programs that I'd like to get into as well. But the inclusion of things like rent and utilities. I mean, I guess my question is kind of like, why is that not standard practice? I mean, it just feels so obvious that, like, if I'm a small business that doesn't own my building, which no small business really does, my number one expense is probably my rent, or at least high up there on the list for many. And yet it's not in my traditional credit profile that I'm paying that. Like, why do you think it's taken so long for us to have some sort of access or ability to systematically leverage things that are obviously recurring payments that make complete sense to use in a credit underwriting sense, and yet traditionally have not been thought of as part of the credit system? It kind of is, that also blows my mind to some extent.
Yeah. Well, I have a relatively simple answer to somewhat of a complex issue. The answer is that most of that information that you just talked about in terms of rental payments, utilities, etc., they don't show up on the major credit reports. So until the credit bureaus start to reimagine the information that they may choose to share, I think that this issue will continue to be, a real challenge because, again, if you consider the fact that so much of the decisions that we're making about someone's credit character is based on, 3 credit bureaus primarily within the U.S. and the information provided there, we're missing something. We're missing important parts, as we've just talked about. Someone is demonstrating. We had a great story, great example of one of our small businesses that signed her lease to open up a beauty salon during the pandemic, actually shortly before the pandemic. And for about a year and a half during the pandemic timeframe, she made every payment on time, but wasn't able to open the shop. And part of it was because, again, having to get the construction and the build out for the shop, get employees hired, be able to attract customers, all of those things have been very, very difficult to do during a pandemic. But the fact that she made all of the payments on time, we were able to look at that information, validate it, and help her get a small business loan that now is allowing her to grow, and the business is really starting to see considerable success.
Yeah, it is amazing that things like that are not in the credit file, not just for small businesses, but for individuals either. That those kinds of data points. I don't know. Maybe I'm an optimist, but I feel like with the kind of data world we're living in now, that the opportunity to make access, because those pieces of information were available to lenders, but you had to work hard to get them. Right, you had to ask and call a landlord and get payment. And that I'm optimistic that we're living in a world where getting those things in a systematic, automated way so that we can start to really leverage them, whether that's through the credit bureaus or through integrations through aggregator services, is going to open up a world of possibility for us to be, more holistic in how we look at the applicant and their capability to repay a loan, their history and the credit or payments market, if you will, outside of just purely the credit market. It feels like a moment for optimism that there are ways to address some of these gaps and make credit more accessible for more of our entrepreneurs and consumers.
I think you're right about that. And I can tell you that at the federal level, within banking regulatory agencies, this is a matter that has caught attention. I think there are great conversations happening today in terms of how to be able to build models that allow small businesses and everyday Americans to have access to credit and access to capital that ultimately supports them for their financial future. But more importantly, or equally important, it supports the overall GDP for the nation. We know that if we can help build some level of equality in terms of access to capital, credit, and education that supports it as a foundation, we can systemically improve our nation's GDP. And that's in the interest for all of us to be thinking about how we do that and get it done as soon as possible.
Absolutely. Absolutely agree with you on that. And I wanted to follow up with that. If you talk about systemic issues that we should all care about, I know you had at least one small business program that was focused on like carbon footprints and improving carbon footprints and investment for businesses. I thought that was another interesting kind of category of thing that like, yeah, but we care about, the access to lending for businesses from a GDP point of view, but also to improvements and things that can help us from a climate point of view. Talk to me a little bit about that, the program you guys were having there. I think specifically targeting MWBEs, but what was the nature of that program? I'd love to hear a little bit about it.
Sure. So this program was developed in partnership with Greater Harlem Chamber of Commerce, which is a hyper-local chamber here, of course, in Manhattan, uptown in Harlem. But it happens to be one of the chambers that, through a number of programs that they do, reach national appeal and often catch a national and international attention. We were very proud to work with them for this green energy women, minority women entrepreneur uh, uh, pitch competition. The pitch competition was centered on a few easy steps, which included asking small businesses to tell us how they would use a grant. There were two grants for $5,000 made available. It presented a wonderful opportunity for us at Carver Bank to learn more about the needs of small businesses and especially to be able to support women-owned and minority women entrepreneurs. We know that minority women entrepreneurs are some of the fastest growing segment of entrepreneurs within our country. In fact, out of all women entrepreneurs, Black women happen to be the second fastest growing segment of women entrepreneurs in the country, but last in terms of income. And so when you peel back the layers on that, one of the most interesting things that's tied to it is, again, access to capital. And what we also tend to know is that communities of color often are impacted, uh, usually first, and more significantly when there are important changes that happen, whether it's climate, environmental, economic changes, etc. So we saw this as an opportunity to really get out there and help small businesses by learning more about them and how we could encourage them to reduce their carbon footprint. We had two winners, two small business entrepreneurs, and what was really great is that we learned through this initiative that these businesses were thinking about recyclable packaging that's biodegradable, thinking about reducing their overall energy usage within their buildings by improving the lighting system and various things, reduction of the usage of paper by moving catalogs to being much more digital oriented, and that again creates an opportunity to save trees. So we're happy to have been a part of this, and where we would like to take this program, we intend to take it this year, is by reaching out, engaging some of our partners that are in the public and private sector and asking them to further support this, to do it at a much bigger scale. We believe that it should include thinking about technical assistance and support for entrepreneurs on top of grants, because then when you marry the two of those issues, you're really getting to the heart of helping small businesses. You're starting to address the issue that many of them need in terms of being under-resourced, and you're addressing the issue of capital while making sure that we encourage these businesses to be mindful of their carbon footprint.
I like it. And it was interesting you mentioned the technical capacity as a second area of focus. And it was, one of the things that came up in my conversations with Nicole Elam from the National Bankers Association, which made me think about the need to not only inject capital into minority-owned depository institutions, but to help with technical capacity and the ability to kind of serve customers in technical ways with relatively limited budgets through things like fintech partnerships. But it reminded me, as I was looking at my notes, that Carver Bank is both an MDI and a CDFI, if I'm not mistaken, which are two interesting designations that I'm not sure everyone in the audience is familiar with. So do you mind just for the bit of everybody kind of explaining what both MDI and CDF are and why you think they're kind of important things in segments of the institutional world today?
Sure. So the MDI, the Minority Deposit Institution designation that we have, is one because of our history. We were founded by a group of African American, Caribbean Americans in New York City that saw a real need for a financial institution. If you can imagine, at the time that we were founded back in 1948, if you were a person of color, you weren't allowed to bank at some of the mainstream financial institutions at that time. And so, here you had middle income people of color with savings, with other things that were, not in the banking system. And so, Carver has been around now. We're approaching our 75th year. And I think the beauty of us being here today is that we continue to be advocates for the underserved communities throughout not only New York City, but really now the Northeast corridor of our nation, because from a digital standpoint, we're in Massachusetts to Virginia, including Washington, D.C.
Wow. Yeah.
That's interested in checking out carverbank.com. But the Minority Deposit Institution is really tied to our history, who we are, and the fact that even still today, a significant portion of our community happens to be people of color within the Black and Latinx communities. Our board of directors, we're a publicly traded company. Our board of directors is 100% African American, Caribbean American today. We've been very proud of that, especially considering the fact that we happen to be a publicly traded company again. We create a platform where brilliant people of color have an opportunity to run a public company, play a critical role in the day-to-day oversight of it. On the CDF side, Community Development Financial Institution, one of the minimum requirements or important requirements, I should say, is that at least 60% of the dollars that you have on deposit must be reinvested in the communities that you serve for overall economic development. There's a number of other requirements there, but this is a designation by the U.S. Treasury. It's a brilliant approach to helping to ensure that economic development is taking place. And Carver is very proud to say that as a CDFI, 80 cents of every dollar that we have is consistently reinvested in the communities that we serve. We've been very proud of that because our focus and mission has remained centered on making sure that we have access to capital to everyone, but especially small business entrepreneurs and people of color. And Jeff, I'll just share one really great example of that. Today, we have a program with the Metro Transportation Authority, the MTA, here in New York. And through this program, we help to provide minority contractors. We provide financing or capital so that they can, in turn, finance projects when awarded a contract with the MTA. And this program is one where we've been able to contribute more than $18 million in access to capital, which is about over 140 loans. And those loans have helped minority contractors contribute to, more than $120 million in contracts through the MTA. So it's an example of when you combine a minority deposit institution and a CDFI, the mission, we're doubling down on the mission, which is to help make sure that access to capital is out there for everyone and improve the overall financial equality in our banking system.
That's great. It's such a great example of how the money you're providing in terms of capital is really, it's not just about the capital that's provided, but the opportunity that unlocks taking 18 million in loans to 120 million in contracts. I mean, that ability to unlock opportunity for those businesses and communities to access and improve, their ability to succeed in those businesses is tremendous. And I think it's what we all, when you get into the banking space, the thing that really motivates you is the belief that access to capital is really an ability to unlock opportunity and so much more than just the capital that's deployed in terms of a loan, but what that enables that small business to do, what that enables that individual to do to buy a home or whatever it might be is really the thing that gets you excited. And it's a really exciting example of what you guys have been able to do. And I love the community focus in the CDFI, like really focusing in on the communities you serve. It feels like the old school of banking, right? Where you felt like you knew the community and the people, and it really was, community was the right word to describe it in a way that doesn't always feel as true today.
That's right.
Excellent. Well, Michael, what's that?
Yeah, no, I was totally agreeing with you.
Because I love conversations like this. It makes me feel all warm and fuzzy about the industry, which isn't always the way you feel. But I think it's what banking is when it's at its best is enabling people to succeed and fulfill their dreams and unlocking those opportunities. So thanks for sharing that. So I have 3 questions that I usually use to end this podcast. It looks like we're at about the right time to do that. Unbelievably, it's a fun conversations seem to fly by. But here are my final 3 questions that I ask everybody, Michael. Number 1, what's the best piece of career advice you've ever gotten?
So the best piece of career advice is probably the same as the best piece of life advice, which is if something matters, never give up. And it deserves being repeated again. If something matters, never give up. There's a long story to it that I'll just shorten it by simply saying to you, it was a great conversation with a very wise lady some years ago, my mother, and it was a conversation about my career, where I was headed, the pressures of balancing family responsibilities while trying to make a difference. And the reassuring words that I heard from a very wise lady, my mother, was that if something matters, never give up.
That is great career advice and great life advice. We get a lot of great life advice in our career advice question. I like it. You can't beat advice from mom, right? That's always the ultimate source of truth for many of us.
That's right.
Don't go against mom. All right. Second question. What's the best advice you've gotten about the kind of financial services, banking, lending space in general and throughout your career?
Well, that's a really tough question because there's been, our business, our industry, it continues to change. And so what I think that probably one of the best pieces of advice is to continue listening to your customers. If we remember that the primary reason we're here is for our customers and our community, and if we follow that path, it'll lead us to where we need to be. it certainly will help us to make sure that we remain relevant. And so our example for Carver, the reason that we've been able to be around for 75 years now is that we continue to listen to our customers. And listen, I will say that we are not a financial institution that has a bank on every corner. We're not in 100 countries. We're not going to be the first to create some new technology that's scaled at an international level. But we are going to be and continue to be financial first responders. We're going to be there when our customers need us, and we're going to continue to listen to them and create services, solutions that ultimately help meet their needs.
Do you have advice on how can be effective at still hearing the voice of the customer, particularly if you get removed from the day to day, or how that voice comes through the organization, or you make it easier for you to hear that customer's voice? Because I feel like so often it can get lost in a conversation with a teller or an email or a call center, and like how you really get good as an organization at understanding what your customer is telling you, and following. Because it's a great North Star, but it's another frequent theme in my advice, I think, is it's simple and yet hard, right? It's not a complicated concept, but executing it is not always easy. And that difference between the simple idea and the challenge of actually living it, I think, is sometimes where the hardest part of that is.
Yeah, I would say, regardless of the size of the institution, there has to be someone that is dedicated to continuing to reach out to customers and and receive feedback, hear their voice. We've done it at a community bank level by inviting small business entrepreneurs, inviting customers in, and having a conversation with them, sitting around the table for an hour and a half and learning about the challenges, the issues, the things that they need help with in order to grow their businesses or to achieve that first time home purchase. And then we've taken that feedback as a group and worked with partners internally, externally, to develop solutions around that. So the key is that it has to be someone's job to listen to the customers and be laser focused on developing solutions that ultimately meet the needs based on the feedback received.
Love it. Last question. What's one bold prediction about the future? I mean, one bold, something I could bring you back and see if you were right or wrong.
Yeah. Well, I think community banks will continue to gain momentum. They will continue to be seen, especially CDFIs, seen as a beacon and a safe place for entrepreneurs, first-time home buyers. We've never had more attention, or it certainly hasn't been in a lot of years, the level of attention and awareness that's now being created around CDFIs. Community development financial institutions are very unique institutions because of their scope and remit. I think the work we're doing is incredible, and it's fully supported at the U.S. Treasury level. So I predict that you'll continue to hear and see more about CDFIs and how we're changing the face of banking.
The continued prevalence and increased focus in CDFIs. That's a great prediction. I love it. It runs a little counter to many. I think the sense of consolidation of banking and the focus on can the smaller players compete with the mega banks, but particularly you're right for that first time home buyer, for that new to the banking sector, for that first time entrepreneur that doesn't meet the traditional profile. It's a great set of institutions, and you're certainly right, at least for me, that I'm hearing a lot more about them and hearing a lot more from them recently. So bold prediction that continues. Great way to end the podcast. Michael, thanks again so much for making the time to join us today. I really enjoyed the conversation.
It's a pleasure, Jeff. Thanks so much for your time. Have a great rest of your year. Talk soon.
You too.